The price of gold. I've been fielding a bit more in the way of questions from folks around the price of gold, but I think more importantly behind it, I think the question really is, well, is the price of gold reaching these high levels? Is it an indicator that things are going to look rougher with respect to financial markets going forward? So in this video, I'm going to discuss gold, its role in financial markets, its role with respect to an inflation hedge, how useful gold is overall, and whether or not you can take a look at the price of gold as some type of indicator as to what may come in the way of the performance of stocks and bonds. So let's just start with what gold is, right? Gold is a relatively low utility metal. There's not a whole lot that gold is used for. There are some electronic components that gold is necessary to be able to construct, but by and large, and from the history of humankind, humans have spent a lot of money, a lot of time to dig up the stuff out of the ground, melt it down, put it into bars, to only put it right back in, underground again into some type of vault, guard it with all sorts of degrees of safety, just to have it there in the off chance that it's necessary to be able to satisfy trade or things of that nature, which is really interesting because if you have a number of these floating around in your wallet, what you're going to notice is right here on the top, it says it's a Federal Reserve note. So since 1971, during the Nixon administration, they took the dollar off the gold standard. So no longer could you present this and get the equivalent in gold because it wasn't backed by gold for over 50 years. So all this really is nothing more than an IOU on behalf of the United States government and Treasury. And the faith and confidence that the world, planet Earth, is going to be satisfied by all debts, public and private, being satisfied by the United States government utilizing these paper pieces of money. That is really how the system goes around. So gold itself doesn't have a whole lot of usefulness. But when the market is concerned that inflation may be higher, or there's going to be disruptions with respect to foreign trade, like what we have right now, investors are more apt to buy gold in response to those different types of threats. And foreign ownership has increased fairly dramatically over the course of this year, particularly from March, April till now. Now that coincides with a lot of these trade wars, the tariffs on, the tariffs off. Nobody really understands or knows exactly what's going to happen, least of all necessarily the decision makers, I believe. So from that perspective, I think a lot of foreign governments are looking to increase their gold reserves just to be able to kind of balance out their trade deficits looking forward because they don't know exactly what that impact is going to be. Now, also, what's been happening is a lot of the world's currencies, including the US dollar, have weakened over the course of the year. And when currencies weaken like they are now, it now takes more dollars to buy a troy ounce worth of gold, which is inflationary. So a weakening US dollar, along with other currencies, is creating some inflationary pressures. And there's a lot of dynamics that go on within this, but in large part, if the dollar continues to weaken versus other types of currencies, that can make our foreign imports that much more expensive, which leads to higher potential prices, which again feeds the inflationary fear, which leads to more people buying more gold potentially. But in the long run, inflation is best offset by utilizing a diversified group of stocks, because historically, stocks have been the only asset that's been able to outpace the rate of inflation over a long period of time, at least here in the United States. So given everything that's been happening in the market, and given the fact that there's a lot in the press with respect to the price of gold, I don't know if it portends any future weakness. There's a lot of uncertainty that's out there. I always say we're never going to know that we're in a recession until after it has already happened, and we're not going to necessarily know the circumstances behind it as well. Because if we take a look at the last several market swoons, COVID, novel event, world had never experienced a shutdown and pandemic. So of course, financial assets reacted in response to that new information. The great financial crisis, the worst since the 1929 collapse and Great Depression in the United States. That was a financial and banking crisis, existential in its nature, but through a lot of different decisions made at that time, made it through. So all of the different types of events in the past are going to have a slightly different type of ring to them, but they're all going to be similar in a way of, all right, something challenging has happened, but owning gold, it's not going to be your savior. And if you have it as part of a diversified portfolio, maybe it makes up 3 to 5% of a diversified portfolio. that's not enough to protect you when things go poorly. And it's not enough to offset things or really move the needle in a positive direction looking forward, because it just doesn't have as much in there to really move that needle. So hopefully you found this valuable. My next ask of you is to make sure that you put the phone down, put the tablet down, go out, live life in the real world, and bring joy by utilizing your money.